Hello, friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about an interesting company which could become a multi bagger. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Now about AXTEL Industries, but before I talk about AXTEL Industries, I want to make a request about Patreon. I have started a Patreon channel in order to support my YouTube channel here, and I request you all to kindly submit some kind of amount to it so that I get the support or the initial pickup that I require to initiate more projects on YouTube. And the best one would be if once I get around 100 Patreons, I'll be able to then start with a education program, a total education course on investments and stock ideas and how to do technicals on stock, on different kinds of stocks over a 16-week period. Currently I have 7 Patreons, and I thank all of them who have joined over the last couple of weeks, and I request you to kindly put in only $2 a month. That is only 140 rupees a month, and that would help me a great deal in order to take some fillip to continue with putting more videos on the YouTube channel. It has been becoming difficult to put continuous videos on YouTube, but I would like to help all individuals here, and that's why I look at all the comments and try to answer all comments, whichever that come to me in every weekend. I mean on all Sundays, so that nobody is left out, because I consider and value all your time that you put in order to look at my videos and put in those comments. And I want to continue with this. Just a little bit of support on your behalf on Patreon would go a great deal, or would go a long way, in order for me to continue with the YouTube channel and bring further, you can say, riches to you in the coming months. So I require capital to extend the channel to a new level, and in that regard, I request you to kindly put some amount towards Patreon and help me through this. Now about the company, or Excel Industries, and what it is all about. An interesting company that came to light, and one of my viewers had put in that request, and I just went through their numbers and what it is doing, what is their business, and I feel that this is a very good hidden gem and one of the marquee stocks that could become very big over the next 5, 7, 10 years. Established in 1991, Excel Industries is engaged in business of manufacturing of process engineering equipment for food, pharmaceuticals, and chemical industry. This is kind of interesting. To put it in simple terms, it basically manufactures large machinery equipments used for processing food, such as conveyor belts, shafts, other machineries to cut foods, etc., like to make chips, biscuits, chocolates, etc. You in companies like Nestle or Bingo, in companies like DFM Foods, etc., you require heavy machinery in order to get the operations done over millions of kgs of say potatoes or other kind of raw materials, which turn into finished goods of chips and biscuits and chocolates. And they provide such kind of equipments. Their major client include, as I said, Bingo or Horlicks. The brands I'm talking about, not the exact company, but Horlicks is of GlaxoSmithKline and so on and so forth. So Bingo, Horlicks, Glucon-D, Red Label, Basmati rice brands, different Kohinoor, etc., all LT Foods, Nestle, and many more. So they are into this division, and they sell their products to these companies. Now the catch here is that whenever the economy turns around and the companies expand, then this company will do really well, because once the company starts expansion, then they'll require equipments of all sorts in order to put in machinery for their factories when they put up factories. So at this point of time the stock is not doing that great, and the company is not producing very good numbers. Last 2 quarters have not been that great, and that's why the stock has not run up appreciably. But I believe once the economy recovers even a little bit, these companies which are in the consumption sector would do really well, and at that point of time there will be expansion for sure. Nestle or other companies like Pepsi Foods, etc., would try to expand over a period of time. So a good 7 to 10 year play, Extel Industries can become. If you look at the financials of, well, probably September of FY20 versus FY19, there's not much to talk about except the fact that the profit has gone down appreciably. They paid taxes this time around, while last year in September they did not pay tax. So it's good that they are paying taxes now, because a couple of years back they were not paying taxes at all. I mean, for the last 4 5 years. So they paid taxes, and that's why the profitability has gone down even further. Although the operationally also the business has not done that well over the last 6 months, as I explained just now. Virtually debt free, very little debt, probably a crore, 2 crores debt is on the books. The return on equity is very interesting. The return on equity is 29%, whereas the net profit margin is above 15%, which is exceptional for a small company, and for a company which is at the cusp of a breakout with respect to what the economy is doing, because at the moment the economy is in deep trouble, and yet they are producing ROEs of northwards of 25 30%, which is extremely good. So if you look at the performance of the stock has been consolidating over 2 years. So in the last 2 years, the performance has not been that great, and that's why I'm saying that the stock has not run up that much, and that is why this company looks very attractively priced. The stock has only gone up around 10 12%, and it is currently giving a breakout because it has been moving up for the last 3 4 days. I've checked that around from around 120 125 levels, it's now close to 140 or beyond it. The return ratios, as I explained, are very robust, and dividend payout is also good. So they are paying around 1.5 rupee dividend or so for a 200 crore market cap company. It is pretty good for a 140 rupees stock. To pay a dividend of 1.5 rupees is pretty good, a dividend yield of more than a percent. And the last quarter and a quarter after before that was not that great, but I'm sure in the coming quarters, after 2 3 quarters, this company will do well. And remember that if the stock has not done well over the past 2 3 quarters, the stock has not moved that much. So 1 or 2 good quarters could make the stock go up appreciably. So why a compelling buy? I feel that it is serving the food and consumption industry is the first and foremost thing. That rather than buying a Nestle at a 60 80 p, or buying anything which is in that, I mean, Britannia, etc., Colgate, and so on and so forth, at such high P's, you can buy Axtel Industries, which serves these companies. So it is like a contract manufacturing company, or providing raw material to or machinery to these companies. You can directly buy that company which is serving all these industries, and once consumption really picks up, this company will really do well. So serving all the food industry is one thing why I like the company. It is not very expensive. It is trading at only 15 times earnings, so this is also very attractively priced, not trading at 30 40 times. At least it should trade at around 30 times, with an ROE of 29 30%. So at least double from here is expected in the coming months or so. So keep that in mind for sure. So trading at only 15 times is very, very interesting, and that is one big reason why I want to buy this share. Second is the point that it is serving the food industry. Currently, it has multiple clients, and this is interesting. They don't have just one client or 2 3 clients in one industry. They are serving industries in chocolates or milk foods. They are serving into chips and biscuits. They are serving industries into tea, or you can say grain foods like atta makers, etc. Any industry that require heavy machinery, External Industry is right there and supplying the machinery to them. So that is why it is also interesting. It's not that they are dependent on one or two companies, and if the business really turns bad in those companies, the stock will suffer. The market cap is also a very interesting thing. Why I like this company at 210 crore market cap. It is virtually a micro cap, just a 200 crore company serving an industry which is in lakhs of crores. So interesting. I'm not saying that it will become a Nestle or it will become a Britannia, but once it is serving these companies, it can easily become a 2 3 thousand crore company over the next 6 to 8 years or so. Very robust ROE. So if you look at the return ratios and margins, they are very, very strong at between 30%, 25, 30%, which is really good. And a combined play on many food companies. That is the best part. That you are not buying one company which is into food or FMCG. You are buying a company that is serving all the FMCG brands, all paint companies, etc. The many clients. If you look at their website, you'll come to know that they have a number of clients with them. If you look at the technicals of the stock, there is strong support between the 110 to 120 region, and that is from where the stock has really catapulted to 140, 145 levels currently. The 200 DMA is at around 112, and currently it is breaking out. So remember that it has a very low equity base as a 210 crore market cap company, plus the equity base is low. Then you may understand that people, whenever the stock is bought a little bit, I mean, even few thousand, even you can say a volume of few thousand shares traded could really put the stock on a 6 7% move. Whereas if there is selling, little bit of selling, then the stock to go down. So it is extremely volatile, so keep that in mind. Can show sharp moves being a micro cap. So have a deep stop loss if you buy, and or you can buy on supports. On any dips towards 120, 115 levels could be very interesting levels to buy into Extel. So what needs to be done? I believe that you buy as an SIP. Don't put a lot of money into it, but yes, buy as an SIP. Put only 5% of your total holding into it. That the promoter holding is pretty good with a little bit of FII and DII holding. So keep that in mind. Also, the not an issue with that as well. Keep track of numbers, and once numbers improve, buy more because the stock will zoom. So don't buy when it goes down a lot, but buy when things really look even better. And have a 7 8 year time frame. I'm pretty sure this can easily be a 2,000 2,500 crore company. It can become a multi-bagger, but do not put a lot of money into it because it is near 200 crore market cap company. So not much we know in detail compared to some companies which are 30 40,000 crore market caps. So put only 5% of your total exposure, and let's see, hopefully you're going to make big money from it. So this was my video on External Industries, a multi-bagger pick from my side. Please like and subscribe my channel, hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.